Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday, happy Labor Day weekend. Hope you guys are all getting ready for a good long weekend. Technically, it's the last weekend of summer, so I hope you had a great one, and here's to a wonderful fall. Well, the jobs number is out, and the market was waiting for it all week, and it's here. And here's what happened. It was a miss. Jobs number came in lower than expectations. We were expecting about 210,000 jobs added to the economy. The real number came in at 173, and that was lower than what was expected. However, the previous 2 months were both adjusted higher, and so that kind of made up for the miss. We missed by about 44,000, but the two revisions upward added another 47,000 that weren't technically there, so it's kind of a break even. The unemployment rate actually fell. It was at 5.3%. It went down to 5.1%, which is very, very close to what the Federal Reserve has been saying that they've wanted to see the unemployment rate at. Now, contributing to that unemployment rate falling was also that about 45,000 people left the workforce. So the labor force participation rate decreased to 62.8%, worst number basically almost ever. So that added to a little bit of the weakness here to this jobs number. And the Dow Jones Industrial Average is suffering today because of that. That's down at about 250 points today. Who knows if that'll continue, but so far, stock market really doesn't like that, which would typically be a good thing for interest rates. Well, that's not necessarily happening. Interest rates aren't getting worse today, but they're not getting a lot better, which is what we would expect. The reason is that if we peel the onion here on some of these jobs numbers, there's some inflationary data that the bond market really didn't like. We saw average hourly earnings increase 0.3%. The expectations were for 0.2%, and the average hourly earnings year-over-year number now is at 2.2%, and that is potentially inflationary. We also saw average hours of jobs, our average hours worked for the week, increase to the highest level since 2009. So both those things are again potentially inflationary. So really the big thing that the market's looking at is what is the Federal Reserve going to do at the meeting here in September? Most were thinking that they would probably hike interest rates in September or October. That was almost a given until the stock market has had its troubles over the last 2 weeks. So a lot believe that this Federal Reserve is not going to increase credit in September, may not increase it for the rest of the year. I don't necessarily think that that's going to happen. Federal Reserve really wants to increase short-term credit. And they had a window of opportunity to do that, but with the stock market volatility, that's kind of closed it a little bit. But the Federal Reserve just needs to get this done because they've been talking about it for a year and a half. They have the data to do it. Federal Reserve, one of the voting members, Fisher, was out there talking about how the economy can take it. And I think maybe not in September, but in October, they'll pull the trigger. Hopefully the stock market won't continue to be as volatile, might recover a little bit, and the Federal Reserve will just, boom, pull the trigger and get it done. If they don't do it, I think actually that would be worse for long-term credit, for interest rates. But if they do it, if they do increase short-term credit, I think that will actually help long-term interest rates. But we'll keep you informed as to what's going to happen. So if you're out there working this weekend, it's a great weekend, with a long weekend to be showing houses. And if you have any customers that need any help, please give me a call. We'd be happy to help. So if you're working this weekend, so are we. We'll keep you informed. We'll let you know what happens. But the great Fed rate debate is what is on everybody's mind. And maybe we'll get a little picture, or maybe we'll find out what they're going to do here in the next couple of months and see what happens. Okay? We'll talk to you later. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.